And we are back with another episode of Pure Perspectives, and I have the enormous pleasure of being joined by both the fellas. Ladies and gentlemen, we've had them together. We have Mr. Gary Pierce and Mr. Willis Richardson. How are you, gentlemen?
Good. What's going on?
Wonderful.
Good.
Wonderful.
Good. We haven't done one of these since I think we tried the live thing. Here we are.
Here we are.
This is real. We're doing it.
We're doing it. Yeah.
We're doing it.
We're just not really structured today. We're just going to have a little conversation about
Shoot from the hip.
Shoot from the hip. It's, middle of July.
Mm-hmm.
I would say I think it's probably agreeable that none of us thought we'd be where we are today, given how the hopes we had in early January. But here we are. And this week has been bumpy, to say the least. So kind of what's your guys' read on the first half of 2026? Gary?
First half started out with a bang, as you mentioned. We were rocking and rolling. January, February rates were, fives were in the conversation on a lot of deals. Just looking at the 10-year, we started the year at 418. It's at 453 as we speak, as high as 466. Basically, in perspective, just take 200 basis points, add that to the number, and you're at 6.5 to 6 3/4.
There you have it.
So, again, I get the luxury of bringing the bad news. Yeah. But it's not been bad. It's not been a bad year.
No, I mean, look, we're still having a lot of conversations. I think we just expected to be in a situation where we might see some refi activity from those people that were purchased post the bottom of COVID. Thought we'd see some of that. We made some considerable efforts to attack that, and it kind of went away right in front of our eyes. And then, I think things that are cracking right now are equity products, obviously, people, high interest debt, and then, the investor stuff, right? Investors are still going to invest. So, it doesn't mean things grind to a halt. I think those that are familiar with the cycles, that is the mortgage interest rate market environment, know that it is a bit of a roller coaster, and we're just at the not so much fun part of that roller coaster.
Yeah.
Willis, what's your read?
Well, the funny thing is that 6.5, that's higher than it was in January and February. But you know what? This time last year, I think it was 7.25. It's better than it was last year, but we're having less involvement from buyers right now, at least on the buy side, less involvement from buyers than we did last year. And you could kind of speculate that's probably a little bit of just 3 years of inflation really taking its toll on people. I think that might be part of it. Most people don't watch rates like we do. It could be that there was something where there was this hope that there was something happening earlier in the year, and then they'd be able to buy or refi later in the year. And now they found out rates have gone back up, and they aren't. So I think there's a lot of things at play, but I mean, as far as rates go in the last 3 years, 6.5 is not a bad place to be in the past 3 years. It's just higher than it was in January and February. So,
right. Yeah. And as Willis so kindly pointed out in one of our past videos, that your interest rate is nothing but a bragging right to your friends.
Yeah, exactly.
So, if you need that 3%, just to make conversation at the party, that's your problem. Okay.
Yeah, exactly.
That's your problem. It's not our problem. That's your problem.
I'm just selling what's
you
in front
should
of
be
me,
bragging about. I got 7.
Yeah.
Yeah.
Oh,
exactly.
I'm higher than you.
275.
Who wants to be that low? Who wants to deal with that?
Dude, I got a 7, man. 7. 7's better than 2.5.
Yeah.
7 come 11.
7 come 11. Let's go. Roll them while you're hot. So if you take Willis's advice, then rock on,
Rock on.
It's just the spin, right?
It's just a spin. It's all in what you tell yourself at the end of the day.
That 3's closer to 0 than that 7, right? It's,
Exactly.
I think
on a scale of 1 to 10,
we're refiguring the mortgage industry right here on this podcast.
is in real time.
We're making 7 cool again.
7 is cool. July birthdays,
July birthdays.
7-Eleven.
Yeah.
7-Eleven.
Willis, speaking of
That's
birthdays,
my birthday.
7-Eleven last
7-Eleven.
week.
Yeah, that's right. Willis is the big 2-9.
Yeah. All this right here.
It's just a number to brag
game.
about.
Yeah, exactly.
The gray hairs are from the elevated interest rates.
Yes.
He's really 29.
It's really 29. This was all black 3 years ago.
Yeah. It's been rough.
Yeah.
It's rough. Post-COVID for Willis hasn't been good. What else we got going on? Like, I guess.
Well, we started a war in the middle of all this that drove all that.
I was waiting for you to say it. Like,
so
I mean,
that's, but this week was a lot less volatile. Like, we talked about in previous conversations, the CPI and the PPI numbers are starting to show a little relief this week, even more than expected. So that was good, but then in the same token, we went back to bombing the hell out of Iran. So I'm sure that oil price is back to the...
I open any news app with like one eye open.
Yeah.
What's going on today?
You don't
never
even have
look
to
at
follow.
oil.
You don't have to follow. You don't have to follow the news. You just go past the gas station and see what they've done. You're like, we must have bombed somebody.
No, that's why I spent a lot of time crying in my truck.
Oh yeah, in California, you would.
Yeah. We were up at 7. I was like, I had to do 2 transactions just to get the tank full.
$7 a gallon.
Yeah, we were up there. Yeah.
For diesel or for gas?
Gas.
So diesel, what, 25?
87.
See, that would be something Willis would be able to brag about. Hey, I'm at $8 a gallon for diesel.
At the lake.
Where are you at?
Where
Lake
are you
Tahoe?
at? What do you got?
Luckily, I wasn't filling up a boat. Somebody else was filling up a boat that I was happily enjoying. It was 10.
$10.
$10.
They wouldn't take pesos. It was 10. Yeah.
Holy moly.
Yeah. But I brought some Coors Light, so I contributed.
So the good news is easy to do the math on that real quick.
Yeah.
It's a nice and easy round number.
Yeah.
Ouch.
Yeah.
Entertainment just went through the roof. Wow. I don't know.
So,
we'll see what happens.
So our summer vacation, we're camping in the backyard.
Yeah. Staycation.
Staycation.
Welcome. Good plumbing in the outside. Yeah.
Yeah.
I don't know. What do you guys think? New Fed chair also.
I was going to ask you about that. Like, Fed chair was in the news daily. Now it's just kind of like he's almost invisible. Like,
he testified this week in front of the Senate, and I think he's saying the right things. I think he's got a lot on it. I mean, it's what, $6 trillion balance sheet they've got to manage. We have inflation that has been 4 years elevated. I mean, the policies are still TBD, right? Like he's taken over. He's trying to figure it out. I think across the board, all the Fed members are not excited about inflation, even at 3 or 3.5, whatever it was this past reading. So who knows if they've got new levers, new approaches. Hopefully they do. I mean, that's why you change, right?
Yeah.
Mm-hmm.
I don't know. We'll see. He's definitely not excited about the inflation the way it is. And hopefully they can come up with policy that'll fix that.
Didn't he propose changing how inflation was calculated? Like, I feel like I heard that somewhere where he was taking something out of the traditional inflation and it was going to give better inflation numbers and I can't remember. Yeah.
Well, I mean, if it's real numbers, that's fine. I mean, but just changing playing the shell game doesn't do us any good, right?
No, it doesn't. It doesn't.
So I don't know. We'll see. I do know they are looking at how they calculate a lot of the reporting back, right? Like, so employment data, for instance, still blows my mind that the employment data we use that Fed policy is based on surveys from HR departments from less than 1% of the companies in the country. And so that's what Fed policy is based on.
It is mind-boggling that
survey.
in this day and age where we have AI doing unbelievable things, we're still, they're paper surveys.
Well, it's
You get
probably
it in the mail.
what is it? What's the Survey Monkey? I'm sure
It's-
it's probably what it's coming from the U.S. Treasury.
Sorry,
Your survey's ready.
got caught in spam. You're not going to get my data.
Yeah,
well, I mean, to that point, I've changed how I look at my bank account. I'm only looking at credits and not debits. So things are much better.
Yeah.
Things are much better. I have a whole new accounting outlook. And man, life has been better. I highly recommend it. Don't look at the debit. Don't look at the credits. Just look at the debits.
Yeah.
Or don't look at the debits. Look at the credits. It's a new. It's new. Okay, give me some time. It's new. It's a new accounting method.
Oh man,
I should be homeless within a month.
Yeah, give it time.
Let it marinate a bit. What else we got in the news? Anything?
I think World a lot of consolidation, right? Like, on the real estate side, Remax.
Yeah.
Gets bought up by Real. I think it was end of last year's when Redfin and all that was going down. And then, all the back and forth with the Zillow and the MLS. I think that's still an ongoing battle, but a lot of consolidation. KW just bought up a big brokerage out of Phoenix, I think, or Scottsdale area.
And to think about that MLS battle, like that's been going on back when we were at Lending Tree. So early 2000s, we were in that fight.
Yeah.
And it's still going on.
Doug was the OG of the anti-MLS.
He was the OG of going to the Department of Justice and saying, we might have an issue over here.
Not to date you or anything, but that was 20 years ago.
Ooh.
So that just puts it in perspective, these realtors and brokerages and their disdain for the MLS and how that's been going. So this isn't a new phenomenon for real estate.
As a Canadian, it's similar to the timeline of Quebec trying to separate.
They're still working on it.
They're still working on it. Now Alberta's trying to join the party, and like we're out too. I'm like, I'll tell you how this goes.
Yeah,
get comfy.
Yeah,
and, I wouldn't start designing your new flag yet. It's going to take some time. Anything else we got? Anything else we want to touch on, boys?
I don't know, Willis. What are you seeing?
World Cup final. Who you got?
Argentina.
I don't even know who's in it.
Okay, we got one of the teams.
England. Ooh. Spain, maybe?
Well, there's only 2 teams, Willis.
Well, there are? Well, I thought there were 4. That's how much I'm watching.
I don't even. What do you got, Clark?
Clark froze.
He's frozen.
Well,
it's awesome.
That's awesome. No. There was.
Sorry,
did you see?
Wi-Fi went out.
There we go.
I'm back.
Good. There he is.
See, it's not, this high level, we deal with all the same problems everybody else does, right? Like technology. It's not like we're, in this studio down in Dallas, Texas.
As Gary said to one of our partners that we're talking with, like, I don't think Joe Rogan's quaking in his boots about our podcast.
No, he's definitely not.
I mean, we're coming.
Not coming from.
Yeah. We're coming.
We're only 3 hours away. I mean,
who's in
it? Go right
Clark?
down there.
Clark, who's in the finals?
Spain.
We don't even know.
Argentina.
Oh, it is. Did you see that picture of the Argentina guy and he's bathing a baby and
oh yeah, and he's playing against him in the final,
and he's going to play against him in the final. The baby that he was bathing.
Yeah.
The baby. So when he was in Barcelona,
there's an 18-year-old playing in the World Cup final, basically.
Yeah. So he was. This mom won a drawing or something to have a photo shoot with your family with a soccer player, and it was what's his name, the big guy,
Messi.
Yeah, it was Messi. So Messi is bathing in this photo shoot. He is bathing this baby. And then this baby grows up to be this player that's going to play against him in Spain.
It's insane.
I think I sent it to you on Instagram. You got to check those. You got to check those reels that I send. They're fire. fire reels.
Let me
Hey,
let me.
it's how I show.
Can we wrap
my
this
love.
up? Apparently I got to go check in with my IG inbox.
Your day, yeah, I'd clear your calendar.
Yeah,
clear
guys.
it. There's
Hey,
a lot in
sorry,
there.
I can't write your loan today. I'm tied up.
Willis is
I'm
over here
checking.
shooting fire over here on Instagram. We'll talk Monday.
Monday.
Man.
All right, boys.
Nope.
Good
Finish
catching
strong.
up. That's where we are. Mid-July. Plenty of time left. Plenty of time on the clock.
Oh yeah.
Puck's in deep. Let's go.
Sticks on
that's how
pucks.
25 went too, though. 25 was kind of slow first half, and then it really picked up.
It ripped.
August through December. So
I'm all about
rip.
Let's
rip it.
All right, reminder, give us a subscribe, leave us a thumbs up, leave us a comment if you like this style of content, and if you like having both these guys together with me or it's too much. You just let us know. Actually, just let me know and I'll handle it on my end.
Yeah,
Thanks,
break
guys.
it easy to us.
Yeah, please break it easy.
I'll let one of them down easy. Don't worry. Thanks so much for joining us, guys. A reminder, get your mortgage plan in place, reach out to a loan officer, get ahead of it. Make sure you have everything dialed so that when you find that house, you're ready to go. Thanks for joining into Pure Perspectives. We'll be back soon with another episode. Take it easy, guys. Have a great weekend.
See ya.
See ya.
All right.